Good afternoon, everybody. It's Max Norbury here with the weekly report overview for the week commencing the 25th of July, almost at the end. So guys, this week we are looking at a number of things. First and foremost, it is Fed week in the markets, alongside a bunch of other stuff. Very, very busy fundamental week this week. We're looking at CPI data for the Australian dollar. We're looking at retail inventories, goods trades, crude oil inventories for the US dollar, on top of the fact that it is the FOMC week as well for the United States, and that's taking place on Wednesday evening at 7 p.m. London time. Following that, we also have GDP out for the United States dollar on the Thursday, and then finally on Friday we're tying things up with retail sales for the Japanese yen, German unemployment change, Eurozone CPI data and GDP, and United States core PCE price index stuff, which is a bunch of inflationary metrics there, which will really be looking to shake the markets up, especially after the ECB that we've just recently seen. We've got Lagarde talking all about the TPI, and the different mechanisms they have in place to counteract the inflation and assist in the Eurozone's crisis that they're facing at the moment. Also, obviously, with the United States, we're going to be interested to see what Fed Chair Powell has to say about either raising rates or not raising rates, based on the inflationary metrics that we have at our disposal at the moment. We are looking at a big rate increase this time around, yet again to 2.5%, which is the analysts' expectations. I think based on the economic data, that's it seems to make sense. Possibly might be a 0.25% increase down from their expectations, but we'll have to wait and see. But overall, guys, that's what's going on the economic side of things. A lot of fundamentals. It's going to be a bit of a minefield out there for new traders. What I would always recommend is if you are brand new to the markets, it's not about understanding the individual bits and pieces of information that we see on the economic calendars, but it's more about being aware that they are there. Okay, it's about being aware of their presence. Because when these events can happen, you can see volatility strikes. You can see price action do the whipsawing effect, which is where it spikes up and spikes down, and it can shake you out of the market. So it's just better to be aware of their presence than anything else at this stage. So looking over here then at the report this week, we've got one of our analysts, Scott, and he is talking about the DXY of all things actually this week, taking a bit of a swerve from the S&P 500. He's looking at the DXY, the United States dollar, actually coming back down to around that 105.50 area, which I think he's suggesting that it could look for a bit of an area there to actually buy back from. So maybe rise from 105 back up to the previous highs, maybe 108 and there, and so on. FOMC, of course, like I said, is this week, which is going to be a big time for the United States. So maybe he's looking here, from what he's saying here, he is looking at, weakening US economic data has led to the rapid deterioration in rate hike odds for the Federal Reserve. Possibly, maybe he's looking at an undercut of the rates there. Maybe he's not even looking at a rate hike at all. And he's, we're looking at that DXY coming back down to 105 as a result. So that information's there about the DXY from Scott. Next up, we've got Nick, and Nick's looking this week at the S&P 500. So he's taken the S&P 500 as his own choice. He's looking at pretty technical plays here. He's looking at a breakout of the ascending area here, maybe back down to retest the descending level, which is acting as the upper limit of the wedge that he's looking at here. He explains his entire thought process. He's looked a little bit at the fundies as well as the technicals there to kind of generate his bias. A lot of decent information there, guys, so highly recommend checking it out. Next up, we've got myself, and I'm looking at the stock 600 market this week. Again, a lot of fundamental information in here that I've come across, done research on top of my technical play as well. I'm looking at a really big long-term falling wedge. Along here, we have just recently traded up to the upper limit of the falling wedge, and in conjunction with the fundamentals that I've been looking at personally as my leading indicators to a declining euro stock market, I am looking at the kind of fundamental and technical play for a breakout below the supply and demand at 415 for a run back down to the previous lows at approximately 400. But all the information's in there about what my view is for the stock 600 index this week. And then finally, guys, to tie it up, we of course have Shane, and Shane's here basically listing off everything you need to know this week, including the key markets that he's you know, suggesting there. So tons and tons of information out about the fundamentals of Shane. So definitely dig in deep and have a good look at that. So guys, if you are brand new and if this is your first time to looking at our market reports, if you want it, it's absolutely fine. You go to ForexSignals.com, you scroll down to the very bottom of the ForexSignals.com page and you see Trading Room on the left hand side. If you look at the bottom of the Trading Room icon, you have Forex Forecast. If you click that link then takes you to this page where the Forex report will be. Well, where the markets report will be, let's say. So that's that. So next up, guys, just going to give you a quick little overview of the Forex G8 currencies. We've got the dollar, euro, Aussie, NZD, the CAD, pound, yen, and the Swiss. So this week, guys, with the dollar index, we are looking quite bearish at the moment. Just like I would like to reference Scott and his work that he's done here with the dollar index. I completely agree. A move back down to 105.50 looks like the plausible course of action here. As a result, we'll probably see the euro break through this area of resistance, trade back up to 103.50. And the Australian dollar at the moment is up against a big level of resistance. We may see that commodity currency come down. And if you look at the New Zealand dollar and where the Canadian dollar is as well, these can kind of tally up quite easily. We've got the New Zealand up against resistance. We've got the Canadian dollar on top of support, but they could break through it and come back down to the big next support level down here as well. So those commodity currencies at the moment are all looking like they're coming up against something that could cause a bit of havoc in those markets. We've got the Great British Pound here at the moment, the Great British Pound 4-hour time frame. We have had a bit of a retracement up here at the moment, but we've seen a real failure to break out above the 124.85 area and push its way up higher. So I would actually be on the side of selling into the pound this week and possibly look at a move back down intraday style to 124.49. Possibly looking at cable falling, for example, you know, 30, 40, 50, 60 pips. We've got the Japanese yen up here as well. Japanese yen's hit this area of supply and demand. Nice big rejection out of the Japanese yen so far, and I'll probably see that market come back down to around 906.60 as a first point of call. And then finally, guys, we've got the Swiss. Swiss at the moment up against resistance, big rejection point so far, looking to come back down to around 123.50 to 123.20, and looking overall pretty bearish, I think. So long as we can break out of the ascending channel level that we're at the moment, I think that's going to prove to be a decent path of least resistance right from 124.22 all the way back down to 123.31 if you're trading something like Euro Swiss. For example, Euro long, Swiss short, probably looking at about a 40 pip trade idea out of the back of that, maybe a 50 pip trade idea out of the back of that one. All right, guys. So that's it for me today in this video for the weekly reports overview. We all are going to be talking the markets every single day, multiple times in the day inside the trading room. So please feel free to come along and join in as you see fit. 7-day free trial and all that jazz as well. But I look forward to catching up with you guys inside the trading room. Take care, and above all else, trade very safely. All right, guys, take care, and I'll see you then. Cheers.